The following program is paid for by EG Tax. All opinions or statements expressed on this program are solely those of EG Tax or its guests and do not reflect the opinions of News Radio 930 WBEN or Odyssey.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930, toll free at 1-800-616-9236, and cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Well, hello, Buffalo. This is Chris Fabian again, not Esther Gulius, but I am from EG Tax. Again, joined in studio with my beautiful wife, Tiffany.
Hey, happy Saturday.
Happy, gorgeous Saturday.
Yeah. And the Bills are playing, and last preseason, very exciting.
Yes.
Is there a wing festival this weekend, too?
Next weekend.
Okay, next weekend's a wing festival. Yep. That's going to be, do you know where it is? Is it
Highmark
at
Stadium.
Highmark Stadium? Okay, that's so cool.
So let's all get deep fried food. It's really good for us.
Yeah. And Esther's off today. Maybe she's eating some deep fried food. Probably not.
Yeah, I'd put $1 million on no if I only had $1 million. But yep, so we're from EG Tax. We're here to help you with your tax needs. We're going to continue our summer series today with a special guest. It's not the one that we did have planned because life does happen. Jesse from Cross State got sick. We're going to be joined by Mike Sparazza, the insurance expert from the Financial Guys, who's making a day out of a Saturday, going to spend 3 hours on a Saturday to help educate the listeners of WBEN. Hey, Mike, how you doing?
Good, guys. How are you?
Good. And then before you get to Mike, you want to talk about our tax school that's starting off?
Sure. So our tax school starts in October, meets 2 days or 2 evenings a week, a Saturday class or even online. We'll teach everything from A to Z, and the best thing is we do have job openings afterwards for you. So if you want to think like us and get paid for it, what a great opportunity.
Yep. And then we also have Ready, Set, Budget seminar. When does that start?
The Budget Beater seminar, and then I think we're going to be with the Financial Guys for the Ready, Set, Retire seminar too. So the Budget Beater is in October 5th. You can register at our website. Great opportunity. We're going to have financial people, we're going to have bankruptcy lawyers, we're going to have budget tools, we're going to have hopefully somebody from like a consumer credit counseling to help give advice as well. So we're always looking to help our listeners out there.
Lawyer, because an option, we had Dennis Kitchen on. An option is always bankruptcy. Sometimes you're just lugging around a dead body and you just want to cut it off. And so that's what bankruptcy protection gives you, an option for doing that. And then Mike, you like to help people save money too. That maybe you'll be at the seminar. We're hoping that comes from a different facet. So you want to look at your insurance needs, look at your home, your auto, and maybe you're paying too much. And so you really give, you get to shop around and give people a different perspective and a different option. Is that right?
Yeah, that's the benefit of working with us, especially at the Financial Guys. We work with 25 different companies to help people find better coverage and save money. And I'm sure everybody out there listening knows right now insurance premiums are not as low as they once were. We're seeing a massive uptick in rates, not only in New York, but across the country right now. So you really do need to shop around and work with somebody that can work with more than just one company out there.
Yeah.
Right. And I know that was going to be one of my questions is, why is insurance going up so high?
Well, there's a few reasons. Obviously, we have the natural disaster issue. Not so much in New York. We have our snow here, but these companies have rates in many different states, and sometimes New York gets stuck with what happens down in Florida, whether it be hurricanes or the Midwest with tornadoes. California.
We had our own tornadoes here this year.
We did. We've had two already. That's right. We've had two of those. In California, you see what goes on there with the flooding a lot and whatnot. So these companies have to adjust rates based on natural disasters. But the biggest thing two biggest things I should say we see are liability issues, meaning people suing people right now it happens more and more every single year. People getting sued for somebody falling at their house, getting in a car accident, and they injure somebody. The liability lawsuits, and I'm sure you hear the attorneys and the commercials across the state and across the country. Everybody has an attorney they hear on TV that goes after insurance companies for more money.
Yeah.
That's a big thing we're seeing right now.
I
Go ahead,
know
Tiffany.
we were counseling a client earlier this week, and they have a food truck. And I was like, well, if you incorporate that's that veil of protection, you could also get insurance, because I was thinking to myself, do truck vendors get sued very often? But sure, absolutely. They go to an event, somebody trips over a rock. So anyways, litigation, as you were beating that band, is a real problem.
Yeah, it is. And to your point about the food truck, and I'll say this about any business or any personal home or auto, there are lawsuits every day. We see them every day with our business clients. We see them every day with our personal clients, meaning auto and home insurance. The rate of lawsuits now is off the charts. I almost can't believe some of the things. Quick story that this involves homeowners insurance, but a good friend of mine was playing beer league softball, co-ed beer league softball, about 2 years ago. And he was running to home plate, and somebody got in the way, and they got injured. They sued him for getting injured in a beer league softball game, and that went to his homeowner's insurance. And his homeowner's insurance is probably going to pay out $100,000 or $150,000. He's a client of mine and a very good friend of mine, and that's just the little things that people don't think about, right? You think about the massive car accident or somebody getting hurt at your diving board at your pool, but there's more things out there that happen, and that's an example of a very good friend of mine. Again, probably $150,000 getting paid out just for that.
That's crazy. But if you have questions for taxes, for insurance, give us a call here in studio, 803-0930, 803-0930. Text in the questions at 716-803-0930. And, one of the big things, too, is I'm sure your friend now is worried about getting canceled.
Absolutely. And, we're seeing that more and more. There's companies right now, guys, that are leaving the state of New York that no longer want to do business here because their numbers are not very good in terms of the premiums they're collecting in compared to the losses they're paying out. So that's another thing. Getting dropped, companies leaving the marketplace. It's a very dynamic market we're seeing right now with home and auto insurance and business insurance. So I tell my clients all the time, call us before you call in claims because, I can maybe walk you through. Maybe the claim is only $700 and it makes sense to pay it out of pocket instead of filing a claim. These big liability losses I'm talking about, you really don't have a choice. You got to call those in. But some of these smaller claims, glass claims, little gutter issues on your home, that type of stuff, call your agent or call someone like us, and we can consult you on what to do there.
And then, Mike, without mentioning names, we counsel lots of clients, and there's a big insurance group in the area, and they've been laying off recently. Is that because there's more agencies like yourself that can shop around, and so they're just finding a hit to them or not getting as much business?
Well, there's a couple things. I think that could be part of it. There's also issues where one of the bigger ones out there decided to pull out of New York, so their agents are not able to write business, or they have to write very limited business. And the other thing, too, is some of these agents, these companies that you see on TV, I'll say it that way, because of what's going on in the market, commissions for agents are going down. So they're not making enough money to stay afloat, or if their margins are so slim, they have no choice but to either close the doors or join the independent circuit like we're on, where we work with many different companies. But the other thing I want to say to that, too, is it's hard to get a lot of companies because you have to do a certain amount of business. You have to have certain profitability with those companies. So, it's very dynamic. It's not what it once was, and you got to work with people that have that flexibility like we have to help you out. And even if you get dropped or you have a claim or two claims, we can help a lot of different people with a lot of different situations.
That's great.
Okay, well, again, we're from EG Tax to Chris and Tiffany Fabian. We got Mike Sparazza from the Financial Guys Insurance wing of things.
Before we go to the break, any big letters that you're seeing this week? People can call in with letters, identity theft letters.
Just a lot of identity theft letters where people got letters before they verified and they have to re-verify.
Yeah, so any questions with letters, you can also give us a buzz. But I think, as Chris said, we're going to cut to a break, and we'll see you on the other side.
That's right. At EG Tax, we do treat everybody as family. We love helping people, whether you're our client or not. We just want to make sure your money stays in your pocket and nowhere else where it doesn't belong.
Yep. And there's a text. It came in, and it pertains to Mike. It says, EG Tax and gang. So my daughter got in a car accident, and luckily I am handy and I could fix the bumper collision myself. Would you recommend that? Because I don't want her rates to go up, and she's a young driver.
Yeah, so I look at usually dollar amounts. So depending on what your deductible is and what that, cost to fix, let's say, that's where I'll make that recommendation to a client. I'm just going to use an example. Let's say your deductible is $500 and to fix the bumper will cost you $800. I would recommend paying that out of pocket and not filing a claim, because at that point you're essentially filing a claim for $300. You got to pay your $500 deductible, and then the balance is what the insurance company will pay you. It depends on everybody's personal, financial situation as well. There are certain people out there, if you're living paycheck to paycheck, and even if it's $1,000 out of pocket or $500 out of pocket, if that's something that you just can't afford, you're going to have to put that through to get, to keep your financial well-being sound. So it really will depend. I usually tell my clients, if you can afford something and it's cheap enough, absolutely pay out of pocket, especially in the insurance market we're facing right now. The least amount of claims you can have, the better you will be in the long run. So you don't get dropped, or, maybe sometimes even worse than getting dropped, your premium goes up significantly. So you want to make sure you pay attention, you do what you can to keep those rates as low as you can.
And Mike, I don't know if I'll go first, and then you have a question. I see, Chris. You see left and right and left, right and center, all these commercial for windshield repair items. And so is it just very easy to use one of those fixing units than to have, and do insurance companies like when you use those outfits versus, I guess, a brand new windshield?
Yeah, so it'll depend on what the windshield damage is. If it's a small little, I'll call it like a crack less than like the size of a dime, they can put that, whatever it is, epoxy in there and fix it.
Right.
And that's usually pretty cheap. Might cost $100. Now, most people with full glass could still claim that under glass, and glass doesn't impact you the way that like an at-fault accident would.
Okay.
But, that's a way you could do that. Sometimes, if there's a crack, let's say an inch or two deep or wide, I should say, they may want you to replace the windshield. The difficulty with windshields right now is on a lot of these new vehicles, there are so many sensors in the windshield that when you have issues, you got to be careful. And sometimes they do have to replace those, and those windshields can cost, $1,100, $1,500, $2,000 even, depending on the vehicle type. So that's, again, where I would suggest with people, if it's something you want to do out of pocket, great. But if you want to go and put that through, because it is a more expensive windshield than it was 10, 15 years ago, you got to do what you got to do. And again, glass doesn't impact rates the way that an at-fault accident would, or even hitting a deer would. Glass is treated a little bit differently because it's under your full glass coverage.
That's good. What were you going to say?
Okay. Now, you brought up premiums,
Yes.
whether 500, 1,000, if it can be higher. How much, like, if I were to have a $500 premium and I go to $1,000 deductible, I should say deductible,
Yeah,
not
deductible.
premium.
Yep.
Sorry. What is the cost savings significant, or
So there's a lot of factors there. One is, each insurance company is different. But the other factor is, let's say it's a vehicle that's assigned to a child in your house, going from a $500 deductible to a $1,000 deductible may be significant savings. Certain companies, it depends on what your total premium is. I've had clients, their total premium for one vehicle is, let's say, $1,000. Going from $500 to a $1,000 deductible might only save them $60 a year. And if at that point I would tell the client, well, the cost benefit there, if you get a claim and you have to pay $500 more out of pocket for the $60, decrease your premium would have had, it takes you, 10 years to make that up. So it really depends on the individual, specifically what their premium is. But I see it a lot. There are a lot of times where, it could save you $100, $200, $300, depending on if it's a child with assigned to that vehicle, and it makes sense. And we run those numbers for people and give them advice on that. The other thing I would say too, guys, is I work with a lot of people that their deductibles were $100 or $200 because that's what they've had for 15 years.
Right.
Sometimes it's worth it to bump it to $500, even if the cost savings isn't that much, because you don't want to put a claim in for less than $500 anyways. So it makes sense to save the $60 or $70 because you don't want to file claims less than $500 at this point in time. So you might as well get the savings out of it, knowing you're not going to claim something for, let's say, $300 at this point. So that's something I talk to clients about all the time. Now, Chris, I just want to talk about home deductibles because that's a little bit different. There is more, significant savings with homeowners policies than there are with auto policies when you talk about deductibles for the most part. So if somebody has a $500 deductible and they bump that to $1,000, maybe you save $150 on your homeowner's premium, and that at that point it's very much worth it.
And then circling back to cars, I was just talking to a nurse practitioner, and she's thinking about taking a job where you're on the road a lot. Does that increase the amount that you're going to pay for car insurance?
Yeah, it usually does, because if you're, let's make an example, we're in the financial industry, and some of our reps in our office drive to clients' homes a lot, or they drive to, different venues to do seminars or whatever. If you're doing a lot of, home calls and in that field, if it's like home health care or something,
right,
that instead of being on a commute, which means you're going from your home to your office, you kind of go on a business rate. It's not the same as like a contractor would be under a contractor's rate or a business rate, but you're still getting a business rate essentially because you're going to different places. That absolutely can increase your premium, not by a ton, but it will increase your premium because it's not commuter use anymore. It's now a business use of your vehicle. So that can absolutely impact rates. Yep.
Okay. And I think this is a good time for me to slide in the question that the food truck person had. So the food truck owner who called this week, their question is they were about to buy a new car and a used truck for his food truck business. It was a pickup truck to put equipment and things like that. And he wanted to know first, if the insurance, Chris, he asked about the insurance, if it should be in his personal name or the business name, and it was a LLC. And so Chris's advice to him was to put the truck in the LLC because it couldn't pierce that veil of protection that's offered by an LLC. Whereas if you put it in his personal name, it opens it up for litigation.
Yeah, in terms of the legal side, I usually stay away from that, just not being an attorney myself. But I will say that, commercial insurance, what you're talking about there, like a commercial auto policy, which is what that truck would go on, I do recommend people, it might be a little bit more costly, but if you're using it primarily for your business, you guys know this with the tax part of it, but also it does shield you from liability issues personally if you put it in the LLC. And then on top of it, you can still use it personally, the vehicle, if you're going to take your kids to sports or you're taking your kids to school or whatever it may be.
Right.
But I do recommend if you're going to use a vehicle primarily for business use, like you're saying, hauling the food truck, maybe if it's like a trailer or if it's carrying equipment or whatever it may be, I definitely do recommend looking at the commercial auto policy because there is more risk there. That's why commercial insurance is more expensive. There is more risk when you're using your vehicle for business, again, rather than just going to your office every day or driving your kids to school every day.
Yeah. And then the second part of his question was, could he Section 179 it when I do his tax return this year? And so, Chris, you want to answer that?
For a used car, no.
Yep, it has to be
a new car.
A new car. But I did tell him the good news, and the good news is a car is depreciated over 5 years, and so we prorate it versus how much he uses it for personal, how much he uses it for business, and so it's over 5 years, and so there's still a significant write-off that he's going to get for the next 5 years. So it's not like an all or nothing. It's just that a Section 179 allows you to take it all up front, whereas this person, because it's not a brand new truck, he's going to have to take it over 5 years.
Right.
So-
And, here we are, we're on WBN. You can hear Mike knows what he's talking about with insurance. Give us a call here in studio, 803-0930, 803-0930 now. During the week, you can reach Mike at 716-768-8222 or 833-THIN-GUYS. He'll love to sit down, 10 minutes. He could save you a lot of money.
Yeah. And even if you have a business, he can run the numbers to see if there's a savings for business insurance for you, right? Is that right, Mike?
Yeah, Alec Toth in our office works with our commercial clients, and I recommend taking a look at business policies because, as you guys know, for most people, if they own a business, that is their biggest asset in the household. So make sure you're covered properly because one or two losses if you're not insured properly, can take down your business. And that's not saying that to scare people, but if you don't have the right coverage, whether it be something with liability or whether it be, your building that your warehouse is not insured properly or up to the right amounts, that can really put a damper on your business. And people need to just take a look at and dust those policies off, because sometimes you're with the same company or the same policy for 20, 30 years and you don't realize things have changed or coverages are rejected now, or certain things that are really important to look at that Alec in our office does a great job with. He'll dissect your policy, see what you have, see what you need. If it's not included there, it's very important for business owners to make sure you're covered properly.
Yeah.
And, speaking of making sure you're covered properly, I know when we do a lot of consultations, especially people with rental properties, small businesses, the rental properties we always say, maybe you should become an LLC because of the liability aspect of it. You want to protect your main property. And they go, nah, I have a big umbrella policy. I don't think I have to do that. Is that a good idea? Is that a bad idea? What's your opinion on that?
I mean, I tell my clients that have rental properties, you at least do need the umbrella. And I'll give you an example. This is a family member of mine, has a property, and the same attorney has sent legal paperwork to him 2 or 3 times for different people that have tripped over the sidewalk. And I know this home because it's a family member. They've tripped on the sidewalk, 2 or 3 different people now. And, again, he's got good coverage, thank God. He's got an umbrella, thank God. And he actually has that in an LLC, thank God. I'll say that too. But, this stuff can happen, and you got to make sure you're covered properly. I know we're coming up against the break probably, guys, here.
Yep,
but I can finish that on the other side of the
Sure.
break.
No, you can finish it.
Well,
No.
no, we got to take a hard break for the news.
Yeah.
Okay, we'll talk about the umbrella policies in a minute. Give us a call here in studio, 803-0930, 803-0930. We'll catch you on the other side. And we're back. EG Tax here in the studio. 803-0930, 803-0930, star, there we go, star 930 on your cell phone. Chris and Tiffany Fabian here from EG Tax. We want to help you with your tax questions. We got our summer series going today with Mike Sparazza, home and auto insurance, and even he has connections with business insurance too. So call in, get your questions, text them in. We'd love to help you. And Mike, you were talking about umbrella versus LLC.
Yeah, so I wanted to finish that thought because I think it's important too. So when you're, if you have a few rental properties, let's say, it's probably good to at least look at the LLC part of it, because then again, it's not to you personally. These are some of the biggest risks we're seeing with liability lawsuits right now, whether it be somebody falling on the property, an issue with a tenant. It's really a good thing to look at the LLC there, but if you own maybe 1 or 2, rental properties and you want to just do a bigger umbrella, that might be something you can do too. It's again, a lot of these things, guys, like you guys with doing taxes for people, it's very, personally different for every individual. One may be the LLC, one may be the umbrella. It really depends, and that's why it's good to get a second set of eyes on it. Take a look, get some advice. I always tell clients to legally with the LLC compared to the personal name. It's probably a good thing to talk to an attorney too, but everybody's situation is different. It's not a one-size-fits-all when you talk about these different things.
Yeah, and very good point. There's a text that came in. It says, EG Tax Gang, help. I received a letter from the IRS asking me to prove my withholdings. I can never talk to somebody at the IRS, and so I sent over the proof of my withholdings twice. They keep asking for W-2 withholdings. It's not a W-2. It's withholdings on a pension. I don't have a W-2. Any advice?
Yeah, well, you got to stay on top of them. Give us a call. We'll call, see if we can get it set up over the phone. It may have to be, whether it's a federal or New York State, seen it both ways, you have to get your senator or your representative involved. and reach out to their local office and say, here's the proof, send it to them 2, 3, 4 times, and I'm getting nowhere. I want my money.
Yeah, and what about all the IRS reps they hired? I mean, I'm finding it very hard to get a hold of somebody at the IRS lately. Another thing is change your withholdings. This guy probably shouldn't have had any withholdings on his pension because this, Chris, I can't tell you the identity letters. It's so funny. If somebody owes, we find that they aren't getting an identity letter. But if they had a refund, then they haven't proved your identity letter. And so it just makes you scratch your head and say, what's up with that? And so, again, it's always better if you're in the driver's seat. And so give us a call. We can help you get a tax advocate involved. And like Chris said, sometimes your local congressperson, they have a division for tax help. I've called them myself, and they really can try to poke the bear.
Right. So definitely give us a call at the office during the week, 632-7886. Got another question for Mike. People with children, you brought this up earlier, but does a family's insurance automatically go up when the child reaches age 16, or does it when they get their permit? Because I know a lot of kids now don't like to drive, and they're going to wait till they're 22 to get their license.
No, so it won't matter. It's funny, actually. Even permit with a lot of companies doesn't matter. It's when they become fully licensed. Not every company, but some of them. And that's kind of a self-reporting thing. Some companies will do underwriting, every year or 2 or 3 to make sure if they know a younger child is coming up and if they have their license, they'll run a motor vehicle report to see if that child's been licensed. But it's not – you could have a 21-year-old, Chris, that's unlicensed, and the rate will not be increased because they're of age to drive. If you don't have a license or you don't plan to get a license, the rates won't change. However, when kids do get their license, I'm sure you guys know this, the rates tend to skyrocket because the risk is much higher with a young driver there. Now, the rates will be less if the child doesn't have their own personal vehicle. So let's just say a family of 4, the parents have 2 vehicles and the 2 children maybe are licensed but don't have their own vehicle. They still will be rated, but it won't be the cost of putting a child on a specific vehicle because that's when the rates go crazy. And I wish there was a different answer there that it wouldn't do that, but that's what we see a lot of the time.
Right.
And do you guys, can you offer insurance for other states, other areas? Like, I'm sure you do Rochester, right?
Yeah, so we do all of New York, really. New York City is a little difficult because there's some coastal guidelines and restrictions there, especially for homeowners insurance. And as you guys, I'm sure, would know, New York City driving is a little bit different than here. But for the most part, Buffalo, Rochester, Syracuse, Albany, we do all of those areas. And we're in the works now to start looking at Pennsylvania and Ohio as well in the future. So we're working that way. We were in Florida, but Florida, I don't know if you guys know, I know Esther probably knows, but the insurance rates down in Florida for not only auto insurance but homeowners insurance is just bananas right now. It's something I've never seen before.
Yeah, really, really expensive. I'm sure people, before they get a second home, that's always a tickler that they have to consider before getting that second home,
Yeah, I say this all the time to people. Depending on what your income is, people say go to Florida for the tax savings. And there definitely could be. You guys know this. That's your business. There could be tax savings without the state income tax down there. However, I'll use Glenn Wiggle. He doesn't mind me saying this as an example. His homeowner's insurance, just the homeowner's insurance, is almost $30,000 a year down there.
Oh, my God.
So it's incredible. And then he's got autos with his kids, but he's got the auto insurance almost is over $12,000. So, I mean, it's the tax savings is beautiful. Don't get me wrong with the no state income tax, but depending on what your income level is, if you're moving down there and you're only saving, I'm going to use an example, $12,000 on state income tax, well, the insurance might chew that up and eat that savings up right away. So it's something to really consider. Now, you might be going down there for other reasons too, which is great, but be careful by expecting to go down there and pay the same premiums you're paying in New York, because I'm telling you, it's not happening.
Yeah. Okay. And I just want to remind everybody, we've got, 15, 20 minutes left of the show. Get your questions in. The show is not what it should be without you. You guys make the show. Call 803-0930, 803-0930, and star 930 on your cell phone. Yeah, it's so funny. I have some clients who moved to Florida, even the rate of pay, they say to me, they pay you in sunshine over there. And so that's part of the perk. And so it's really something you have to consider. I know we're talking other insurance, but one of the big things when Chris is always counseling or I'm counseling somebody about moving out of the area is your health insurance. And so you want to make sure that maybe the health insurance that you're given from your employer trails you or moves you or allows you to leave the area. And so you really have to make sure that you dot your I's and cross your T's and do all the right asking before you leave the area. Now, one of my clients, I was just thinking, they have multiple rentals. And so really, it probably behooves somebody, or does it bring down, okay, well, let's switch gears. What if somebody approaches you and they say, I need to have you guys look at my home, my auto, all my insurance policies. And so if you group them together, does that generally, could it bring down costs for people?
I'll say this much. For the most part, in Western New York and Rochester, bundling is always going to be your best option, putting everything with one company. When I speak of that, I'm saying autos and homes and let's say an umbrella policy. For the most part, what I see, I mean, I'll tell you, my team and I, 95% of what we do is bundled business because that's just the best way to do it, the best rate. It's easiest for the client having one company. But certain situations, if there's driving record issues or if there's home claims on the home and there's issues putting the home with someone, sometimes we do break it up. Another thing I see all the time is, recreational vehicles, your boats, your jet skis, your RVs, your four-wheelers, all that type of stuff. We'll put those with different companies usually than we will with your auto and home, just because certain companies, that is their bread and butter, those recreational vehicles. So every situation, again, is different. But for the most part, if we're talking your basic auto, home, umbrella, or just auto and home, yes, we're bundling that up together. And I just want to bring up, because you mentioned rental homes as well. A lot of times we'll use a couple different companies for those because that, again, is their bread and butter is rental properties. Sometimes if somebody has, let's say, 5 rentals and they have, 10 or 12 total units, we can put those with certain companies, excuse me. And what you do with that is you can almost put it on like a business owner's policy, and you can extend liability from different homes and whatnot. So there's some funky things you can do that is good for a client. So we'll look at every situation differently, but for the most part, to answer your bundling question, yes, we'll bundle up because that's going to be their biggest savings.
Yeah,
That's
no,
cool.
you hear it on the news. We see it, like especially with rental properties. Some people don't carry insurance, whether it's on a car or it's on their rental house. And I'm just in awe. I'm like blown away because they're jeopardizing their whole life, right? If they do,
Yeah. Well, let me start with this, Chris. If you're driving a vehicle in New York State, you have no choice. Now, I'm not saying people don't drive with insurance or without insurance. I'm just saying if you have license plates on a vehicle in New York State, well, you can't drive without license plates. Let's start there. But if you have license plates on a vehicle, it is 100% mandatory that you at least have the state minimum insurance, which is $25,000, $50,000. You need that. You don't have a choice. Now, we see this across the country. A lot of people drive without insurance. I don't have the number in front of me, but it is a ridiculous number, a percentage of how many people don't drive with insurance, which is scary. And for your point about the homeowners, if you have a home with a mortgage, it is mandated by your bank that you have homeowners insurance. Now, for people out there that don't have a mortgage, you can absolutely go without. What scares me more, though, Chris, than even the home burning down, let's say, is the liability issue. If you don't have homeowners insurance and you don't have liability insurance on the home, and something happens at that home where somebody's injured, they can sue you personally, and that can wipe out somebody's money overnight, right? And to me, for the, in our area, let's just use average, 600, 700, 800 hours a year, it is 100% worth it to have homeowners insurance on your home, or in the case of your auto insurance, let's say 12 or 1,500 hours for the year, to not ever have to worry about losing everything you built in your life because you just chose that you didn't want to pay the insurance. And I know people out there tell us all the time, I've never used it, who cares? Well, I had a guy in New York, this was downstate New York, a partner of mine down there. He had a guy that had I think it was like an $800,000 house, never used the insurance and decided to self-insure. What do you think happened a year later?
oh boy,
The house burned down. And he was out. You got nothing. You're stuck rebuilding that house with your own personal money.
Yep.
It's just not worth it.
I think we're going to go to Gus before the break. And
Yeah.
so, Gus, you've got a question.
Yeah, good afternoon. I'm actually thinking about moving out of New York, either North Carolina or Virginia. And when I got my New York homeowners policy, they had asked me if I wanted to add earthquake coverage to it, and I just assumed it was included, and I guess it's not. I just wondered, like, when you move to either hurricanes or tornadoes down south or anything like that, is that usually covered under the homeowners, or do you have to kind of request that type of coverage?
So let me just start with your New York question because I think that's important for people to understand. Things like earthquakes and floods are not covered under a standard homeowners policy. Earthquake would be an endorsement that you'd have to add, and then there's a deductible percentage that you have to add on there. And then flood insurance, and I'm not talking about like your sump pump fails in your basement, but flood from storms or, the 100-year rainstorm or something, that or you're in a flood zone and something, overflows. That is a whole specific policy generally you have to buy called a flood policy. You can write them through the NFIP, which is the flood insurance program. Those are different. Now, to go to your question, let's say you live in North Carolina on the coast or you live in Florida on the coast. What Florida does is they have what's called your basic homeowners, and then you have to add a hurricane deductible or hurricane coverage with a deductible. So it's not something that's just automatically included. You have to add that in a place like Florida or North Carolina or whatever coastal state you're in.
Okay, and probably closer you are to the water, probably the more that is, I would imagine, right?
Absolutely. So not only will the generic or your basic homeowner's policy be more expensive generally, but then you have to add in that hurricane deductible and the hurricane coverage, which, let's say you lived in the middle of the state in Florida. Your home insurance premium is probably far less than it would be if you're on the beach in, Jupiter, Florida or Palm Beach, Florida. Absolutely.
And I'm thinking some mortgage companies, wherever he's buying, might mandate that he has certain riders on his insurance policy, right?
100%.
Yeah.
Yep, 100% they will, because at the end of the day, if you don't purchase it, the bank's out the money if you can't pay for it if the house is destroyed. Absolutely. Yep.
Yeah, no, and that's why, like, even though they gave, when I got my home and I got the homeowners and they gave the whole policy, it was like whatever, 15-plus pages, but, you grab a glass of wine and you sit and read it because you don't know really what type of coverage you're getting unless you read the fine print.
Yep.
Yeah, I'll say this. Look, it's a lot for people like me that have done this for a long time now and do it every day. It's a lot. There's, on one page it tells you this is covered, but on the next page it tells you, well, if this happens, though, then that's not covered. So there's a lot of fine print there for sure. I can tell you, though, the basics of stuff, you want to make sure, no matter where you live, New York, Florida, wherever, you have your wind coverage. You have your, theft or vandalism coverage. You have your, I mentioned this to you, Chris, before we got on the air today. Coverage is like water backup coverage. People don't even know that's out there, or service line coverage. Water backups, if the sump pump fails or if there's a sewage backup in the house, it might only cost you $50 a year. Service line coverage is underground utility lines like sewer lines or water lines, or even electrical lines that are underground. If those lines fail and they have to dig up your front yard, from the street to the home, you can get $10,000 or $20,000 of coverage for that stuff. Again, it might only cost you $50 a year. Your agent or whoever you're working with, your insurance professional, should be mentioning this stuff to you guys.
Gus, did we answer your question, or do you have another question?
No, you did. Thank you very much.
Okay, good luck on your move. Go Bills. Yeah, good point.
Oh, no, I just lost Mike. I hit drop. So, Mike, give us a call back. Sorry about that, but we're going to take a short break, and we'll catch you in 2 minutes.
The Bills make me wanna shout, kick your heels up and shout, throw your hands up and shout, throw your head back and shout. Come on now, the Bills are making it happen.
Well, hopefully they are. I know it may be a touchdown. It may not be a touchdown. It's under review with the 2-minute warning. But Chris Fabian, Tiffany Fabian here from EG Tax. Got 10 minutes left. Get your questions in for us or for Mike Sparazza from the insurance wing of the financial guys. Again, you can reach the number here, 803-0930. But if you want to reach Mike during the week, 716-768-8222 or 833-FIN-GUYS. And so, yeah, so Mike, that's a big thing, is what insurance should you have? And because I think Gus was right. A lot of people assume that they cover everything.
Yeah, I use this example all the time. It's someone like me trying to fix my car myself instead of going to a mechanic, right? I say that about insurance. Sometimes a lot of these companies you hear on TV, buy just what you need is one of the companies on TV. And that is just terrible advice because just what you need is the bare minimum. And for most people, that's not good enough. Another thing I would say, too, is shopping online and going to quote your own insurance. You may find a few things like, I could just drop this off and it's cheaper to just do, I'm going to use personal injury. If you're injured in an accident, personal injury protection. The state only mandates that you have $50,000, but to add an extra $125,000 there might only cost you $25 a year. But if you're not working with somebody or getting advised on that, you may say, I'll just do the cheapest thing I can do, and you're missing out on certain things that could really save you. God forbid you're injured in an accident, or God forbid your basement backs up because a sump pump fails, or God forbid, a cheap one too I talk about all the time is rental reimbursement. If you get in an accident and you need to go rent a vehicle for your you rent a vehicle and they'll give you $50 a day sometimes, or even more, up to $1,500 for the month that you don't have to pay out of pocket. That might only cost you $20 a year to have that type of stuff. So just work with somebody that can advise you, because it may, and with the way we shop, guys, we shop people around. We may be able to add all these things, and it's still cheaper than what you're paying now.
And then, Mike, dialing it back, I sort of missed. What did you say about the underground wires? What was that story? What did you say about that?
So it's called underground utility line coverage or service line coverage.
Okay.
It's something that if, let's say, you have a gas line underground, or a plumbing line underground, a sewer line, or an electrical line, whatever's underground from the street, let's say, to your home.
And that's like the trend, and that's the trend nowadays, right?
Yeah, exactly. That's right. Yep. And that's what they're going more towards.
Right.
And if there's something that's broken under there, maybe the town or the water department or whoever will come fix that pipe for you. But then you're stuck with your whole front yard being destroyed because they had to dig up everything from the street to the home. There's coverage, like I said, service line coverage that you can get $10,000 or $20,000 of coverage. It might cost you $50 to $100 a year. And we're seeing it now in a lot of these towns in the local Buffalo area where the lines are just old and they have to repair them and fix them. And that's something you could add, for $50 a year, and it would protect you if they have to fix their front lawn due to them, digging it up.
And that goes back to you saying that if you're trying to fix your car, you don't know what you're doing. It would be like, and so you can really decipher.
Right. So, I'm going to feed off of Tiff for a second. It's like what we say when people, I'll just do it myself online. You may save $100 by doing your own taxes, but you could be costing yourself thousands of dollars of a refund or reduce your balance due. It's the same thing with insurance, right? You do it yourself.
And Chris, to tackle that too, it's no different than what we do on the financial planning end. You can invest your own money all day long, but if you go in at the wrong time or come out at the wrong time, you may just have cost yourself tens of thousands of dollars on your investments trying to do it yourself, timing the market yourself when you could work with professionals. We say that with everything we do in our office. Chris Moody in your office works with the Medicare team. Doing it yourself, I'm not against that. Do-it-yourselfers out there, God bless you. It's not a bad thing always, but you can really cost yourself a lot of money, and no matter what you're doing, whether it be taxes, financial planning, insurances, by just guessing and doing what you think is best without talking to a professional. It's like, I use this example all the time too, going to the doctor or just self-diagnosing yourself on WebMD. You want to make sure you go to the professional because you want to make sure that you get the right advice or the right information. God forbid you're sick, right? Self-diagnosing yourself might not be the best approach if it's something serious.
Absolutely. Your life and your body is your biggest asset. And then your house and your car, your family's second. Yep. And so you really have to pay attention to these things. And so it's really smart to have the professionals. And I think the same thing with your investments. It's funny when people are dabbling, and then we talk to people who come in and they've lost all of the money in their 401ks, or maybe God forbid they had it in a high risk. And so you really want to make sure you do the right thing and dot your I's and cross your T's. Can't say it enough,
And Tiffany, let me just say one thing on that too. Everybody's life changes every year, or 3 years, or 5 years, or 10 years. Things you did 10 years ago maybe don't fit what you're doing now. And I say that to clients all the time. Deductibles is a great example of that. Maybe when you first started driving, you had that $100 deductible because you didn't have a lot of disposable income. God forbid your car was destroyed. Maybe now you're in your career fully and you're going to be retired soon and you have money to be able to pay a higher deductible. That type of stuff should be reviewed. And one other thing I want to say before we finish up that's important, what you insured your house for even 5 years ago, compared to what it costs today to rebuild those homes, make sure your home is insured at the right level that it should be, because as you guys know, inflation, the cost of materials, the cost of labor over the last 4 or 5 years has really increased a lot, and make sure you're insured properly.
And then, Mike, when you were talking about life changing, I was just thinking about COVID and status post-COVID world. I don't know if this plays into it. Lots and lots of people are working from home. Does it make any difference if people are working from home versus going to the office? Does that help with their car? They're not driving as much. I guess if they had to see clients in the home, is there any difference with insurance with working from home?
Absolutely. A couple quick things, and I'll let you guys go on this. But number one, if you were a commuter rate, now you're a pleasure use rate because you're not driving to work every day, so that could reduce your premium. Number two, if you work from home, some companies give you a discount for that because you're home every day, so the risk of a big loss at your home is different.
Oh.
It's less because you work from home. And then, yes, the biggest one you said, though, that can scare me a little bit is if you have clients coming to your home, your home insurance company needs to know that, because there's a higher liability of a liability lawsuit there if people are coming to your home rather than you going to their home or you going to an office to meet clients. Insurance companies get a little worried when people are coming to the home for appointments or whatever. There's a higher risk of an issue with that.
Huh? But I didn't know that there was a deduction if you call your insurance company about the non-commuting and things like that. I think Chris has a brother-in-law who strictly works from home. There's lots and lots of family members who are working from home, status post-COVID, And
Absolutely.
It's a great option.
It's a different world we live in now.
Yep. Well, Mike, we appreciate taking your time this Saturday to help us and help the listeners out there understand insurance. If you want to reach Mike during the week, again, 768-8222 or 833-THE-FIN-GUYS. If you want to reach EG Tax, call us 632-7886. Our website is egtax.com. You can register for our tax school or our budget inflation seminar. And until next Saturday, hope you enjoy the sunshine.
The previous program was paid for by EG Tax.